So, as markets keenly await the outcome of the US election, one thing is for certain, that volatility will continue. Trump is likely to question the result if he loses, and Brexit is now going back to the vote in the UK Parliament. However, there is always an investment opportunity, according to Henderson Global Investors, which has $170 billion under management, and after its merger with Janus Capital next year, it will be a top 50 global asset manager. I spoke with Chairman Rob Adams. Rob Adams, welcome to the program.
Thank you.
We've got the US election this week, which is a significant phase of uncertainty. We've then also got Brexit returning to the UK Parliament as yet another vote for that. Is this a whole new phase of uncertainty that global markets are entering into?
There certainly is an awful lot of geopolitical uncertainty around the world. They're two of the main events. Clearly, at least one of the results of those main events is going to be known in a few days' time. However, even after the US election, there'll be ongoing uncertainty in terms of policy and its application. So financial markets have factored in that uncertainty. We've had a pretty volatile year. But I guess with uncertainty comes opportunity from an investor's perspective.
There's a lot of talk that markets and investors haven't fully priced in the probability of a Trump win. How has Henderson managed for that? Have you priced it in?
Yeah, good question. I mean, at Henderson, we don't have a house style of running money. Our individual portfolio managers make their own determination and have their own views, and will apply that in their portfolios as they see fit, within sensible parameters, of course. But at a market-based level, there's the uncertainty we've had in the last 5 days has built. We've seen negativity in global investment markets, and people are talking about, strategists are talking about the fact that there's a Clinton and a Trump effect, +3, -7. So, if Clinton gets in, that provides a positive injection to global investment markets, and the reverse being true, but exacerbated on the downside should Trump win. So that's one of many sort of views about what might occur post the election. I guess we have to wait and see and look for those opportunities.
So where are the safe havens in this, except for the cliche gold, of course?
Yeah, gold and cash, perhaps, are the safest havens, but even some of the short-end fixed income securities aren't generating the degree of stability that you'd like to see. So I think for us it's about continuing to invest in quality, really defining what quality means from a management perspective through the robustness of income streams and the potential for growth. And if we can combine those sorts of qualities in our portfolios, then chances are they'll ride out these storms better than those firms that don't have those quality standards. You're
looking at more into the Asia-Pacific region. Why Asia when you have the likes of ANZ pulling out?
We think the backdrop in Asia still remains positive over the long term. As a fund management company, we make investment decisions over the long term, and as we look at these markets from a fund management business growth perspective, we think the opportunities are really positive.
China doesn't worry you?
China is an evolving marketplace for financial services. So, our view is it's important to be part of that, and our commitment will grow or alter depending upon the evolution of that marketplace. But it's too big to ignore. The opportunities that might arise out of China could be material. So we take a view of looking at Greater China as a whole, so Hong Kong, China and Taiwan. We think the opportunities in Australia continue to be good for growing a fund management company, underpinned by compulsory superannuation, of course. It's a large and fast-growing marketplace, and our business growth here in recent years shows that you can grow a pretty good business in that marketplace. And then you've got the second largest pension fund marketplace in the world in Japan, and Japan's pension fund marketplace is going through some pretty seismic shifts right now, as the largest pension fund in the world, the GPIF, is looking to make substantial allocations from domestic assets to global assets. So we think having a connection with Dai-ichi, as we do, who are 20% owners of Janus Capital, puts us in a really privileged position to try and exploit that opportunity.
Just finally, on Friday, the Reserve Bank indicated that it believes Australia is at the bottom of the mining bust, and with a couple of caveats, the only way is up now. Is this the end of interest rate cuts in Australia, do you think? And is that a signal to sort of shift investment thinking in Australia?
Yeah, it was an interesting time to wave the flag. We've seen a real resurgence in certain commodity prices, and in particular portfolios we run where we have a specialist global natural resources fund and a team managing those assets. They've actually over the last 12 months been able to eke out some terrific returns on behalf of investors. So we would argue the resurgence has been there for some time now, but for that to be formally signalled is a good thing. For the commodities cycle and firms engaged in the broader definition of commodities to be positive can only be a good thing for Australia and for our economic growth.
Rob Adams, thank you so much for your time.
Thanks so much, Elise. Pleasure to be here.